Hey guys, in this video, we're going to go over acceleration bands. We're going to talk about what are exactly acceleration bands and how to use them in your everyday trading. Now, when we first plot out our acceleration bands, you'll notice that it looks very similar to our Bollinger Bands. A couple key differences in here. It's going to start out the same. They each have an upper band and a lower band, and they also have a center line band in the middle. Now that center line here for the acceleration bands is going to be either a 20-day moving average or an 80-day moving average. You can use whatever. You're going to look at the last 20 bars or the last 80 bars in here when you are looking at your acceleration bands. And also these are going to be they're going to be equidistance away from that moving average on each side, right around a standard deviation. But it's going to be equidistance away. It's not going to be just following the volatility of each side. They are going to be equidistance away from the moving average. So sometimes when you think of your skew and your standard, your deviations, how you think of a bell curve. And then sometimes with your Bollinger Bands, it can be skewed a little bit. Same with your calls. So, you have call skews, calls are being a little bit more. So your bell curve starts to kind of shift a little bit. These acceleration bands, it's always equidistance away from that 20-day moving average. And we are looking at this on larger time frames. The creator of this, Price Headley, said this should be used in the weekly and the monthly time frames. 20 to 80 bars is what we're looking at. 20-day moving average, 80-day moving average, and you are going to be looking for 2 consecutive closes outside of the bands, and that's going to give you a good idea of the next move that the stock will take on. But so overall, it is an envelope in here that tracks the volatility of a stock, and you have a center line plotted as a 20-day moving average, and you're looking at your most recent 20 to 80 pin bars, and you're looking for 2 consecutive closes outside of the either upper or lower band to kind of confirm what will happen next and give you a nice buy or sell price point. You can also go down and do these in the daily chart as well, but Headley did say that they were used mainly for that weekly chart in there. So as you can see here on our Duke chart, we have this plotted out. We have a nice shaded yellow in here, so you can kind of see with these outside bands at this like dark orange red line right here. So you can see it's kind of trades exactly like a Bollinger Band. You want to see 2 consecutive closes outside of the upper band. That's, when you get short, you come back in, we revert to the mean. And then once we get below the lower, confirm 2 closes, that confirms we are going to get long, and then you can see we go back in and then we revert to that mean. So all in all, acceleration bands are a nice easy way, simple way to track volatility, although since we are being equidistance away from that 20-day moving average center line, it's not going to give you the full story. You are still going to have to dig into your options chain to exactly see where everything is. And also you can use these along with your Bollinger Bands as well, I guess, as double confirmation. But again, you are going to have different bands, a different upper band and lower band plots from your Bollinger Band. So I would suggest using one or the other in there. But all in all, see if you guys can kind of use this in your trading this week. And if you have any questions, feel free to reach out. All right, guys, thanks for watching. Make sure to check us out on our social media. We have attached links to our socials in the description. And we also have a trading service if you're interested. There's more information in the description below.